Ford Motor Company made headlines recently when it announced new rules for its U.S. dealerships regarding the sale of electric vehicles, EVs. Under these new rules, Ford dealerships will have to invest at least $500,000 each to sell the company's new line of EVs. The announcement was made at Ford's yearly dealership meetings in Las Vegas, where the company unveiled its new Model E division. The Model E division was created in March 2023 after Ford split into three separate entities: Blue Oval, Model E, and Pro. The Blue Oval division will take responsibility for plug-ins and regular hybrids, while the Model E division will focus solely on Ford's fully electric vehicles. The Pro division will deal with commercial vehicles. During the presentation, Ford CEO Jim Farley mentioned that Tesla has a $2,000 price advantage over Ford's EVs and that the company needed to change the way it sells EVs. In response, Ford has given its dealers until October 31, 2023, to decide on one of three options. 1. Become a Model E certified elite dealership, which will cost between $1 million and $1.2 million. 2. Become a Model E certified dealership, which will cost around $500,000. 3. Stop selling Model E vehicles as of January 1, 2024. Ford estimates that the majority of the cost for becoming a Model E dealership will be for buying and installing chargers, with up to 90% of the cost being attributed to this expense. Model E certified elite dealerships will be required to have 2 high-powered DC fast chargers and a level 2 charging station, along with at least 1 DC fast charger for public use. Model E certified dealerships, on the other hand, will only need to have 1 DC fast charger, which must be open to the public. Additionally, all Model E dealerships will have a limit on how many EVs they can sell each year, regardless of the dealership's volume. Ford has not yet decided on the exact number of EVs each dealership will be allowed to sell. However, the number is expected to be small, with the sole purpose of fulfilling orders for the company's most loyal customers. According to Automotive News, Model E certified dealerships will only receive vehicles that customers have ordered and will not have any EVs available for demonstrations or test drives. Meanwhile, elite dealerships will be allocated more EVs. Dealerships that opt out of becoming a Model E certified dealer will be barred from selling fully electric Fords for 3 years. However, if they decide to become a Model E dealership after 3 years, they will be able to sell EVs starting in January 2027 if they meet Ford's requirements. It's important to note that under U.S. dealer franchise laws, Ford cannot sell vehicles directly to consumers. Dealerships will be able to set their own prices for the company's new line of EVs. The new Model E division is set to begin on January 1, 2024. Until then, every Ford dealership in the U.S. will be able to sell EVs. However, after this date, only dealerships that meet the requirements of the Model E division will be authorized to sell fully electric Fords. During a recent presentation, Ford CEO Jim Farley discussed the company's plans for its Model E division, which was created earlier this year to oversee Ford's electric vehicle, EV, production. While Farley expressed confidence in Ford's ability to compete with pure EV startups, he also acknowledged that the legacy business remains a crucial profit and cash engine for the 120-year-old automaker. Like other automakers and EV startups, Ford's electric vehicle business is expected to incur significant losses in the near term. According to Wall Street analysts, Model E is expected to have negative gross margins of between 10% and 20%, with adjusted EBIT margins of between negative 20% and negative 30%. These figures suggest that Ford will need to absorb significant losses as it invests in its EV unit. Despite the expected losses, Ford has set an ambitious goal of achieving 8% margins on its EVs by 2026, with 2 million units in annual production. The company hopes that this will help boost its overall adjusted profit margins to 10%. However, Deutsche Bank analyst Emmanuel Rosner estimates that Ford may be incurring gross losses of about $9,000 per EV sold, and he expects the company to reveal Model E operating losses of $6 billion for 2022. According to Rosner, the EV business could report even deeper losses than expected, making Ford's target of achieving an 8% EV EBIT margin by 2026 particularly challenging. He notes that no major automakers, aside from EV leader Tesla, are expected to generate meaningful profits from electric vehicles for several years, as the industry works to increase EV output and manufacturing scale. It's worth noting that mass-market EVs like Ford's typically generate lower profits than luxury models. This means that automakers will need to invest heavily in their EV units and achieve significant scale to achieve profitability. While Ford's Model E division represents a significant investment for the company, it also provides a clear path for Ford to compete in the rapidly growing EV market. Ford's primary source of revenue still comes from its vehicles equipped with internal combustion engines, particularly its F-Series pickups, which have been the top-selling trucks in the U.S. for over 4 decades. This segment is expected to remain a key source of revenue for the company, as Farley had noted when he announced the company's split last year. According to Deutsche Bank, Ford's traditional business, known as Ford Blue, could potentially report an EBIT margin of 7.3% for 2022, effectively offsetting the losses from last year's EV business. Morgan Stanley's Jonas believes that Ford Blue is generating significant cash flow, which is supporting the capital-intensive EV business. Nonetheless, Jonas warns that investors might question how long Ford can sustain this arrangement. Ford aims to reduce structural costs by at least $3 billion by mid-decade to increase margins. Kumar Galhotra, the head of Ford Blue, revealed that the company intends to achieve this by streamlining complexity, quality, and structural costs over the next 2 to 3 years. In March 2022, he mentioned that nothing is going to be off the table, and that the company would strive for world-class efficiency by reducing warranty and advertising costs. Ford Pro, the fleet unit of Ford, has been a pleasant surprise for the company in terms of profitability, according to recent shareholder disclosures. Deutsche Bank estimates that Ford Pro could have been the most profitable automotive unit for the company in 2022, with an EBIT margin of 23.5%. The operating profit margins for Ford Pro in 2021 and 2022 were 6.2% and 6.6% respectively. Ford has been a significant player in the commercial fleet markets in North America and Europe, and its recent profitability can be attributed to its deep expertise in pickups and the hugely popular line of transit vans. The company has been increasing the profitability of its fleet operations by incorporating software and services that utilize its decades of experience serving fleet operators and new technologies built into its latest vehicles. While Ford Pro's recent profit margins are impressive, it remains to be seen if they will be sustainable. Analysts, including Deutsche Bank's Emmanuel Rosner, wonder if Ford Pro's profitability could come under pressure as the segment ramps up vehicles with expensive electric powertrains. Ford's plans to introduce additional electric models tailored for its fleet customers will likely hurt Ford Pro's margins as EV production ramps up. Nonetheless, Ford Pro CEO Ted Cannis sees fleet electrification as an opportunity for the company. "Our commercial customers are confused about electric vehicles, and they want a lot of help," Cannis said at an Evercore Utilities conference in January. "The key part for us to accelerate the move to electrification is to make it easier. Be patient. You know, we got the right team. We got the right plan. We're growing like heck in our Pro and EV business," Farley said when asked what he would say to Ford shareholders. "This key team is going to deliver for you, and you are going to get a great return on your investment." Will die-hard Ford customers turn their backs as the brand begins to phase out the best-selling combustion engine products in favor of an electric future? What do you think? Start the discussion in the comments, and we'd appreciate it if you'd subscribe and share our channel with your friends. Thanks for watching.